Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast. We were talking about the farm economy with Chad Hart from Iowa State University. And we were looking at commodity markets with Naomi Blom from Total Farm Marketing. Stay tuned with Chad Hart, economist from Iowa State University Extension. We were talking about the farm economy with Chad Hart from Iowa State University. Hi, Chad. How are you today?
I'm doing well, Cesar. How are you?
Let's discuss about these markets for right now in Chicago. What is your thoughts on it?
Well, we've had a pretty good run over the course of this week as the market is still digesting the smaller crop numbers that USDA gave us last Friday. And that has led to a healthy bump in prices that I think a lot of farmers have taken advantage of in these past few days, capturing, some of the 25, 30, 35 cent gains that we've seen across the markets, within the past couple of days. I think the big question here is, can this little rally continue, or do we face some headwinds as we move further down the line?
What is your thoughts on the world supply and demand report?
As we're looking at that report, what it showed was that the U.S. markets are tighter than we expected. It also showed that global supplies, though, are still quite plentiful, especially on the soybean side. And so we do still face some challenges when it comes to export competition out there. But again, it did also give us some, at least breathing room, at least here in the short run. We have been seeing domestic and international usage for both corn and soybeans increase, and that's helping us chew through these still fairly large crops, even though they're not quite the record crops we had once thought.
We've got some concerns about tariffs. Do you have any time with farmers about it?
Yep, we do. In fact, I'd say we talk about that a lot, and that's one of the big headwinds I think everybody's staring at, trying to decipher as President Trump takes over for his second term. He has mentioned that he will be using tariffs throughout his term. The big question for agriculture is, what do those look like? Who is being targeted by the tariffs? Are they targeted at certain commodities, or are they blanket tariffs across the entire import export complex? Because the answer to that question will determine a lot about where agriculture goes, especially in corn and soybeans. We rely upon our export markets to help bring balance back into that supply and use table, and we've been rebuilding those export numbers over the past year. We wish to continue that. Tariffs make that much tougher.
What is their respective of it, Chad?
Well, I think as we're looking at the perspective here, farmers are, let's call it, concerned about the tariffs, but still optimistic about the future. They, for the most part, were supportive of President Trump getting reelected. They knew tariffs would be part of the package, yet at the same time, too, I think they're looking for the possibility of, let's call it, longer term growth in our markets being more possible under his administration. Um, and so that's why we're seeing this. Like I say, it's some concern here in the short run, but with some optimism as they're looking longer term.
Could you explain to our audience on biofuel why it's important to the airliners?
In the case of biofuels for the airlines, and we've heard a lot over the last year about sustainable aviation fuel, or what's known as SAF, there has been a big push across not only domestic airlines, but international airlines as well, looking to reduce their carbon footprint. And the easiest way is to try to move to alternative fuels, either biofuels or using electrical generation. And so there has been this big push, not only through initiatives like the tax credits, 45Z and so on, but you've been seeing airlines themselves, make statements that they're looking to move to more SAF usage fairly significantly over the coming years. And so that has created a strong push to help develop those fuels and to find ways to make them cost effective for the airline industry. And when we're thinking about SAF, um, it's a fuel that can be made out of a lot of different feedstocks. So corn, soybeans, wheat, sorghum, barley, those are all in the mix. But you can also use animal fats, grease, tallow. And so there's a lot of feedstocks that could be utilized to create that SAF. The questions are really what's the best process, what's the most cost effective process to do that, and then what feedstocks best fit that process.
Do you have any final thoughts on the corn production from the world supply and demand report?
Well, one of the big things that pops out to me is with this latest adjustment that USDA has made, as we look at the 2024 marketing year, so the marketing year that basically is the time we're selling the crop we harvested this past fall. This is the first time in the last 3 years where we've had supplies, at least production, lower than annual usage. And that's a really good sign for the corn market because that means we're going through and we're going to utilize not only all the crop we grew this past year, but we're going to dig into those ending stocks. And that's usually a good indicator of higher prices, at least in the near term. So that was why the markets reacted so positively to the news last Friday. And that's why there's this hope that we can continue that momentum, at least for a little while here through the winter and into the early spring.
Thanks, Chad.
It's my pleasure.
This is Chad Hart from Iowa State University. This time for your commodity prices for the Markets Club podcast. Everything was in the red light today. Corn futures was down at 5 to 10 cents. Soybean futures is down at 8 to 5 cents on the quarter. Chicago wheat is down to 8 to 5 cents nickel. Let's take a look for the livestock markets. Cattle is down at 9 to 4 cents. Feeder cattle is down to 8 to 6 cents. Lean hogs is down at 5 to 4 cents. We were talking with Naomi Blom from Total Farm Marketing. We were bringing you on the commodities markets for this afternoon. This is Naomi. How are you today?
I'm doing great, Caesar. Thanks for having me on your show.
Let's discuss about these grains markets for today. Do the grains cycle with the numbers because of the tariffs? What is the technical position of it?
Yeah, there's a lot of things coming up for the grain markets. There is a seasonal tendency for corn and soybean futures to trade a little lower as the month of January goes on. And we'll see what the tariffs may or may not do to the market next week when President Trump takes office and signs his 100 different executive orders that he's interested in putting into action right away. So we're going to be very curious to see how the market reacts to any of that news, along with South American weather forecasts. So when looking at the technical charts, corn is overbought. If we don't get any big, fresh, friendly news next week, the corn market may see a 10 or a 15-cent correction lower. And that soybean market would be in question because it was overbought after the USDA report, after we rallied Monday, Tuesday. But then we saw some profit taking Wednesday and Thursday. So that alleviated some of that overbought condition. So we will see what next week brings. There's a lot of different factors coming into play. And of course, the markets are closed Monday. So that could bring a lot of volatility right away on Tuesday.
Can you explain it about seasonal position?
Yes, so seasonal position, usually like with the grain market, grains have a tendency to be the cheapest at harvest time. And then usually prices slowly increase after harvest and the crop comes to town. And then in early to mid-January, there sometimes is another short-term peak as we get a little concerned about South American weather and how the crop is growing down there. But then usually by late January, we have a better idea of that South American crop. And as long as things are okay for production in South America, then prices start to flip a little bit lower until the U.S. markets get excited about spring planting and summer weather, which then pushes the market higher again, usually into Mother's Day to Father's Day timeframe until we get our crop in the ground and know that it's growing okay. So the seasonals are important to be aware of because they're one of the many factors that help us to keep an eye on potential price direction.
Naomi, I want to go to know that what is your thoughts on the 45Z from Washington, D.C. yesterday? How affect the bottom line of the farmer in the Midwest?
Well, with that information we got yesterday, of course, the guidelines are nice, but they're just that, guidelines, and they're not official actions. And of course, we're more interested to see what President Trump has to say as he is sworn into office on Monday. And is he going to be tackling the biofuels information right away, or does he have other things more pressing on his plate, like border security, making sure the U.S. economy is going all right? He's keeping an eye on tariffs and, of course, trying to bring peace to the world. So I don't know that we're going to get much fresh news out of Washington that we can actually sink our teeth into, and we probably see the next administration kick the can down the road just a little bit. I think in general, in the big picture, things will be favorable in the long term, but Washington is Washington and things take time, so I'm not expecting any magical answers to come about right away.
What is the technical side of the livestock markets on today with deferred contract?
Yeah, so the cattle market, starting to see some profit taking there and position squaring after we had such lofty prices. With the front month contract, we had February finish at 196.60 and April finished at 197.67. When you look at the deferred contracts, the October finished at 190.97 and the December finished at 192.27. So all of those markets have been in a significant uptrend, obviously, for quite some time. Today, though, was the first time that we saw the markets close below the 10-day moving average, which has been holding this recent rally for almost a month. So if we see any further profit taking tomorrow or selling, we might see the market drop another $2 or so just on a technical quick position squaring into the weekend, but we'd still be in a long-term uptrend overall. So traders are probably starting to, just be mindful of what future demand might be for beef and keep an eye on export demand for beef overall, because that price is getting up there and it's definitely becoming more expensive at the grocery store.
The packers, do you have any concerns about the labor problem?
Well, potentially, sure. So like if depending on how things go with the new president, immigration could be something to be thinking about. The border controls could be something to think about. That's also something to think about in terms of seeing feeder cattle not come in from Mexico. So there's a lot of questions swirling out there that the new administration is going to be answering over the next couple weeks right away. And that is definitely a piece of the puzzle and something to keep an eye on.
Do you have any final thoughts on the corn estimate from the USDA?
Well, I thought it was interesting that they did such a big drop. It makes you wonder if they knew that sooner or not. It still was record yield overall, but that was I think the biggest drop I've ever seen on a production cut, barring like a drought situation in summertime. So it was a little interesting, but what it's done for the market now is keep old crop ending stocks in a tighter situation at 1.54 billion bushels. If there's any weather issues in South America going forward, that might then bring more export demand to the U.S. market that could keep the old crop prices supported. But of course, the uncertainty with the new administration and trade and tariff keeps things a little bit up in the air as well.
Is there anything else that would like to talk to the cattle producer about the cattle on the feed report on January 31st?
Yeah, that's the big one. That's the big cattle inventory report where every single category can be massaged. And with the USDA lately, hey, they're full of surprises. So we'll see what they do for us for the cattle market. I would say take a defensive stance going into the report. Consider buying some puts under the market just in case the report gives the funds a reason to exit their long positions and take a profit and maybe start to sell off the market. So it's going to be a big fundamental piece. It's going to be the cornerstone for the cattle market, probably for the next few months.
How is the slaughter numbers for this week?
Well, let me take a quick look here on the slaughter numbers for the week. See if I can find some of them. I saw export sales earlier, which were 9,700 metric ton. And I hadn't seen too much about the slaughter numbers. Let me go online quick and see if I can find something. I know that our pounds and our production have been up over year-on-year levels, but I don't think I saw too much on the specifics yet for this week. I'll have to get back to you on that.
Sounds good. Thanks, Naomi.
You.
Thanks to Chad Hart and Naomi Blom. This has been the Markets Club podcast. I am Cesar Delgado. You have a great day.